Hello guys, let's begin. Sorry, I'm having a very bad allergic reaction. I'm sneezing a lot. So maybe halfway through the webinar, I might need to run off, run off and blow my nose. Okay. Thank you. Thank you, Val. Is like I don't know. I think my room very dusty. Like if you rent house, like tend to be very dusty because you don't do so much cleaning. Okay, let's begin. So let's go through the broad market first lah. Okay, so this week has been a very bullish week. In fact, the last week was also quite bullish lah. Okay, so you can see S&P 500. We have two consecutive very bullish weekly candles and same thing on Nasdaq. Also, you can see how bullish the entire candle is, and also the same for Dow Jones. In fact, the Dow Jones is almost contesting the all-time high again lah. Okay. So that's why I was saying that overall, right, in terms of a broad macro perspective, there are a lot of people saying things like, oh, there's gonna be a recession lah, market gonna crash, this and that. But actually, I personally don't think a recession is that likely lah. Okay, unless something in the US economy breaks down, like certain banks start to blow up and then Federal Reserve have to rescue those kind of stuff lah. So barring all those kind of situation, right, I don't really think a huge economic crisis is going to happen. Maybe a little bit of hiccup here and there lah. Okay, so recently we got the new ISM data that came out for the beginning of the month, and we can see that the service sector in the US is actually back to growth again. So highly likely that going into next month, right, we may see the unemployment rate of US going down a bit. So recently it was 4.3% unemployment. It is one of the highest that we have seen recently lah. Okay, but I think it may go back down to 4.2, 4.1, and then we will have the whole situation, or maybe rate cut is not going to happen because the market is still very strong, the economy is still very strong, that kind of thing. Okay, so it's good to take a look at the yield. Also, you can see how the 10-year yield, right, the 10-year government bond is heading back down again. So initially it recovered, but after that it's heading back down again. So as long as the yield is heading down, right, most likely the stock market will not be that pressured. Okay, so as the yield is heading down, we can also see gold kind of break through the high, and it actually closed at 2,500. So since like 2-3 months ago, right, I have been telling you guys that I'm very bullish on gold. You should be only looking for a buy lah. Okay, so if you all manage to get gold, then that's a good thing. But of course, for us, right, we don't really trade gold, we go for stock. So there is a gold mining stock that I have introduced, which is Newmont Mining Corporation. Okay, Newmont Mining Corporation. So the first time that we ever got this stock was all the way back in March like that, when it was only $34. Currently, right now, it's already $50 lah. Okay, so along the way, right, if you see any pullback, you can buy lah. Even I think at this level might be worth taking a look also lah. Okay, so now going into next week, I believe things are going to get a little volatile. So make sure you are not overly bullish or overly bearish. Okay, make sure you balance out your portfolio a bit, because next week is firstly, we have the FOMC minute, but it is also the Jackson Hole Symposium, which happened on a yearly basis. So Jerome Powell is speaking, I believe, on when is he speaking? Here on Friday 10 p.m. Okay. Jackson Hole Symposium, and then Jerome Powell is speaking on Friday 10 p.m. Just nice, the FOMC minutes is also coming out. So I believe there may be some movement coming in. Okay. So in terms of what I think, right, whether or not there's going to be a rate cut, or rate cut, no rate cut, doesn't matter, but we need to sort of see how the yield is going to respond now. Okay, so if the 10-year yield continue to head down, right, I do think that gold will start to continue to go up, and then stock market will continue to be bullish lah. Okay, so I'm looking at a little bit more on the bullish bias, but still, right, I will have some short position ongoing lah. Okay, So be aware, take note of the Jerome Powell speech. Okay. So let's go through my portfolio a bit. So for those who came last week, right, you can see my portfolio recently jumped up to 60% year-to-date return on investment. Okay, currently I started off the year with $200,000 USD. I'm up about 120K so far, so I'm hitting around 300K somewhere there already. Okay, so going to open position, right? Last week you saw my open position like a very, very big number, like very jialat like that, about minus 40K like that, but you can see this week everything's the minus 40K now narrow to minus 16K. Okay, so even though you can see the negative is kind of like a little bit on the higher side, right? I would say that this is still quite all right, because on overall portfolio level, right, I'm down about 5% now. Okay, so even if I were to clear off all my position right now, in terms of a yearly performance, I will be still up about 55%. I will still be up about $100,000, which is still quite a very good performance. Okay, but what you can also see here is that my overall position here, I have 8 bullish position and 7 bearish positions. So it's a little bit more balanced really. Okay, so going into the FOMC, right, I don't think I need to do much about my position really because I got close to equal number of long and short position. Okay, so a few things happened last week. A few position were exited and entered lah. Okay, Pfizer was gone already. Pfizer it expire lah. Okay, it expire, so I took a $4,500 loss. And then Aplovin also expire. So Aplovin expire, right? I got the 4,200 from the short leg, but unfortunately the long leg is losing about 8,007 now. Okay, so now I got the assignment. I'm not sure how many of you got the assignment now. Okay, so Aplovin, right, even though I'm losing 8,007 here, the assignment here, right, the assignment that I got at Plovin, it is up about $2,000. Okay, so if you want to calculate on the net level, right, I got $2,000 here, and then I lose 8,007, and then I got 4,002 on the short leg. So in total, I'm down about $2,000 like that only. So if let's say Aplovin continue to rally next week, right? Wait, let me go and find where is it. So if Aplovin continue to rally next week, like breakout or whatever, right? Then I think overall the position can break even lah, or even go into a profit already lah. Okay, my target for this stock is around $100 like that lah. So I mean it's a little bit high, but let's see if we can hit the profit or not lah. Okay, so if the Jackson Hole Symposium everything remain very bullish, very dovish, and then the market continue to rally, right, then this definitely can hit $100. Okay, and at the same time, right, for those who also got the assignment like myself, we can probably start selling covered call also in order to protect the downside. Okay, so if going forward, if the stock market goes down, right, at least we got the covered call to help us cover the downside a bit also. Okay, so aside from that, I don't think the Hershey position got unwind also. So basically the cover call for Hershey was in the money. Okay, so the cover call for Hershey was in the money. So what happened was the actual Hershey stock, right? I have to sell it away at $190 lah. Okay, even though Hershey itself was $193, the cover call forced me to sell at $190. Okay, but I mean on the bright side, I got the cover call premium which is about $2,900. And then the short leg on the put option at strike 175 also expire, which I got about $2,000 there. So overall here I got about 4,008 from Hershey okay, but I still have the short, I still have the put option there running okay. The put option is losing about 1,900, close to $2,000. But I do think that if Hershey continue to fall, right, that put option can go into the money lah. Okay, this put option can go into the money. So for those who are considering, right, you can actually short Hershey also if you want. It seems like the stock is kind of like topping out at this level lah. And also for the past few weeks, right? For the past few weeks, if you look at the overall market, you can see that the tech sectors are going down. Okay, you can see the Nasdaq was crashing for the last 3 weeks, and while the Nasdaq is crashing, right, the defensive stock are actually rallying. So if you look at McDonald actually rally for the last 3 weeks, even though the tech are crashing. And then we have things like defensive stock like Hershey was also rallying when the tech stock are crashing. So now that the tech stock are starting to become bullish again, right? I believe that the money will start to flow out from all these defensive stock like Hershey, and then they will start going into all the tech counter again lah. So I do think there is more downside to come from Hershey lah. Okay, so if you are looking to short this, right, you can simply put your stop loss like somewhere here lah. Okay, above here lah, above here, maybe somewhere around here, maybe somewhere around 203 like that. And then I think it can go back down to challenge this level lah. Okay, so I think the risk reward is quite okay lah. Risk reward is quite okay lah. Okay, if you want to go for a put option, also fine. But I already got the put option there, which is expiring on September lah. Okay, so I'm not looking to add any more short position to Hershey, but this is something that you can consider for a downside also, especially if your portfolio is full of long position, right? You need a bit of downside hedging, right? Hershey is something that you can take lah. Okay, and that is all for all the trades that will close out lah. So on the new trade, I still have Crystal Biotech. So Crystal Biotech, for those who don't have it, right, you can consider entering. I don't think it's too late. I don't think it's too late, but for Crystal Biotech, for those who doesn't know, it is a biotech company lah, okay, that does gene therapy. And in fact, they are the only one in the market right now is not curing, treating this particular disease lah. Okay, I'm not going to go through exactly what the disease is. It has a very long name, very boring history lah. Okay, but anyway, they are the only one in the market that is treating this disease. And it's only the US market. They are only approved to sell their drug in the US market, but recently they have been applying to sell in the Japan and the Euro market. And if those paperwork get approved, right, and once they are able to start selling in the Euro and the Japan area, right, this one will skyrocket like crazy lah. Okay, this one will like shoot up like crazy. So my strike price is at 220. You can see the strike price itself is very, very high. Meaning to say my target, it will be somewhere around in the range of 27 something to 300 lah. So if you are entering right now, right, I think it is still quite a safe level lah. Okay, but obviously it is going to be a little bit long term. I'm looking at about 3 months to 6 months lah. Okay, according to their paperwork, the approval for the Euro and Japan area will take place somewhere around end of this year lah, somewhere around December like that. But of course, it doesn't mean that the stock will go sideways and then only December then shoot up. No, it's not going to happen like that. The moment the market hear of any news that is saying, oh, the approval process is going very well, it's gonna just shoot all the way up. Okay, so you have to enter early for this kind of stock. In fact, we may not even have to wait until 2025 to hit the TP level. As long as they announce some form of good news, right, it's just gonna skyrocket. Okay, so Crystal Biotech, consider this, consider also. So the other one is CDLR. CDLR is a very, very ulu stock, okay, because nobody really heard of this stock. But in fact, when my analyst find this stock, I was quite shocked also. I was like, hey, from where you dig out this stock one, but the financial of this stock is very, very strong, okay. And not only that, right, it's a very niche market. What they do is they are a transportation and installation company that deals with windmill, and not just any windmill, those ocean windmill, okay, ocean windmill. So let me go and pull out a picture so that you all can visualize. This kind, okay, this kind of, okay. So they have a lot of ships that will carry this very huge big wind blade and then all the engine and all the parts, and then they will go out and they will install and they will maintain all this kind of windmill, okay. So now it's very niche because they are one of the very few company that does this in terms of providing the ships, okay, providing the infrastructure needed to maintain all this. But not only that, right? They are a European company, so they are not really in the US market. They are more in the European side, and European a little bit more pro-green energy. Okay, US not really that pro-green, but European there a little bit more of I would say they have a lot more policy in place to support all these kind of green energy, okay. So because of this, right, not only their business is very niche, but they are not really affected by whatever going on in the US, okay. So you can see the stock itself, right, when the US market crashed in the last 3 weeks, this stock doesn't really move. I mean, it fell a bit, but it's like 10% only, then immediately recover back already, okay. So I think it has quite a potential to go a lot higher. You can consider this also. The earning is on 27, which is very soon now, okay, very soon. So you have to be chop now, okay. Try to get in before the earning so that when earning come out and then the result very good, it can chong up some more, okay. So these are the so the reason why I'm mentioning these two, right? These two company, they are not really affected by market movement. So for example, even for Crystal Biotech, right, it doesn't matter the yield go up, go down, doesn't matter, because usually biotech company, they don't really care about the economy. They themselves are quite defensive in nature also lah. The only thing they care about is whether the drug get approved or not. And if you got the disease, right, it doesn't matter economy good or bad, you have to cure that disease lah, okay. So in a way, it doesn't really care so much about whatever that is going on in the like the Jackson Hole or Red Card or all this kind of nonsense, okay. So next, we have Home Depot. Yes, Home Depot, we are losing some money, but I'm still holding on to it. So just a very quick reminder, okay. If I do not update anything in the trade setup, right, it means that I'm still holding, okay. If I exit, I will exit. But the thing is, I will exit based on my portfolio, okay. If my portfolio feels that, oh, okay, I need to get out of this trade ready, then I will get out. So if you want to exit, if the trade is in very good profit, you want to run, or if you feel, oh shit, my portfolio too much, I cannot handle this trade, you want to exit, then you can do your own thing. You don't need to wait for me to do and then you do. You have to be a little bit independent now, okay. So I mean that there's no point in asking me, hey, you still holding Home Depot or not, you still holding this or not, you still holding that or not, because me holding have no effect on the stock. Me holding doesn't mean the stock will go in the direction. Like I can be holding the stock, but the stock will still crash anyway, okay. So you need to make decision on yourself. Of course, if I do anything, I will definitely update you lah. If there's no update, that means I'm not doing anything about it lah, okay. So that's not just for Home Depot, but it goes for everything else. So the reason why I am still holding on to Home Depot, right, it is one of those consumer cyclical lah, okay. If the economy is really bad and then next week Jerome Powell says something very stupid, the market start to crash, right, then it's good to have Home Depot because it's going to crash all the way down and then you are going to get profit from it. So what is going to happen is that I will take profit on some of the long position. I'll take profit on maybe things like SMCI. I will take profit on McDonald's, and then I will just sit back and enjoy while the Home Depot continue to crash. But let's say if market continue to rally, right, then I don't mind losing Home Depot also. I will just let Home Depot go. It lose, never mind. Why? Because all my long position are going to continue to make money. So the portfolio is structured in a way where I don't really care what happens next week, whether market rally, market go down sideways, whatever. I am still going to make money nonetheless. So the fact that Home Depot losing money here, right, it doesn't affect me at all, because if it lose money, it's also because I have other stuff in my portfolio that is making money in a situation where Home Depot will lose money. Okay, so that's why it is a long short portfolio. So that is how my portfolio is positioned. So I'm not sure how your portfolio is positioned. So you have to make the decision yourself also. Okay, so you have to, in order to put yourself at a higher level, right? You cannot look at trade in a individual manner, like, oh, Home Depot up or down. Actually, it doesn't matter. What matter is your entire portfolio. You need to structure your trade based on your total portfolio, not just look at one single trade and see whether they can go up or not. Okay. So next we have Bumble. So Bumble, we got this very, very big profit on the downside. Now you can see it's going sideways. Okay, it's not even moving, going sideways, but give it another 3-4 months, right? I think it can go to like $2 like that. Okay. So for Bumble, for those who are looking to trade, you missed the first big drop. Be warned that if you are trading this, right, please only trade using options, because if you use stock, right, and this suddenly shoot up, right, you're going to lose a lot of money. Okay, because if you use option, your risk is limited. It doesn't matter if the stock go up to like $12 or $14, you will still lose the same amount. But for stock, the higher it goes, the more you lose. Okay, so if you are trading this, please use only options. So I'm still holding Mumble. The next one is Mueller Industry. Mueller Industry is this one. So you can also see Mueller Industry losing a little bit of money, but it's fine, because it is the same situation as Home Depot. Okay, it is there to hedge against the downside. If market continue to rally and I lose money on Mueller Industry, it's fine also, because it simply means that my other stock are going into profit. Okay, so you can see it is somewhere, the upside momentum is like a little bit declining already. Okay, of course it rally along with the overall market, but you can see that it is not going up as much as the tech company. For example, if I show you SMCI went up like crazy. Okay, from here to here, SMCI went up 33% like that. But for Mueller, right, it only went up about 9% like that, so it's not really going up a lot. And I hope that it ding dong a bit, and then after that it will start to come down already. Okay, so that's Mueller Industry. If you are looking for short, right, if you are looking to short this, actually it's a very nice level to short also, but you wait for like one more red candle to come down. Okay, if you have not got this short yet, okay, you wait for one more red candle come down, and then you can put your stop loss like here. You can put your stop loss like somewhere $75 like that, and then you hope next week the market bearish and then it will go all the way down. Okay, so this is Mueller Industry. The other one is Wingstop. Wingstop also same thing. Okay, all the short are in a similar situation. It is for hedging purpose. It is simply there in case market go bearish and then we have something on the short side. Okay, so Wingstop is also hanging around like the previous level where the stock actually start to go down, but is looking a little bit somewhat bullish. Okay, so in a worst case scenario, right, maybe I will cut one of the short position. Home Depot, Mueller, and Wingstop, I will probably cut one of them, but I see which one to cut. Okay, I'm not so keen on cutting Wingstop, because Wingstop is overly is very over bloated. Okay, it's very over bloated. Is on something like a bubble level like that. So if the consumer spending is starting to weaken, right, then the room for Wingstop to fall is very, very far. Maybe we might not be able to get profit this round. Maybe we can kind of stop loss. But in the future, right, if it start to fall, then I think we will attempt to short again. Okay, because this chart action at the top here is showing a bit of like people cashing out. There's a lot of people cashing out, and then it's going to fall down like that. Okay, and next, SMCI not going to go through so much now. Okay, it just rallied 33% from the bottom. You can see here SMCI now I'm up 6K. Last week I was negative 12K. Now I'm up 6K. So that's actually a 18K swing, okay? It's suddenly a 18K swing in the portfolio. That's why you see my portfolio, the loss narrow down by a lot. Then AA, AA is Alcoa. Alcoa, so Alcoa is on the bullish side, okay? So if you don't have Alcoa yet, you can consider entering also. But when you enter Alcoa, right, you make sure you enter it with the MLI short, okay? Because they are somewhat in similar industry. They are materials. Mueller Industry deal with copper, Alcoa deal with aluminum, okay? So usually they tend to follow each other. So it's good to have one short and one long, okay? And then you see which one go in your direction, you hold on to that one, you cut the other one, okay? So from there, you can probably profit either way. So in this case, Alcoa is actually in profit right now, is going up. Mueller Industry is in a bit of a loss. But if going forward, market continue to rally, then Alcoa will continue to go up, and then eventually we will cut Mueller, but we will actually get back all our loss and even more profit on Alcoa's side, okay? So that's how we do a long short portfolio. And KBH, okay, KBH is a home builder, but for those who don't have KBH, right, I'm looking to enter one new position on Toll Brother. So I will go through this later, okay? And the rest of the stuff I'm not going to go through, okay? This one I already IWM gone. I'm not sure, maybe gone case, who knows? But I will still hold on to it, okay? Actually gone already. It's on it expire already. Sorry, my bad. Let me delete this. It expire already. Okay. Okay, IWM is expired already. So Chewy, right? Yesterday somebody was asking about Chewy, whether there might be a chance or not. So I do think there's a chance, okay? And in fact, I do think I'm not in this level of loss. My loss is a lot more smaller because I just assumed that it is zero, okay? I did not realize that it recovers so much. So the earning for Chewy is on 28 August, which is next week, okay? Not very long. The earning coming up very soon. So I think during earning, right, it can go up a lot higher, I believe. But if you do not have this stock, right, I also don't recommend you to chase, okay? Our entry was here. If I'm not wrong, our entry was here. Let's check. Yeah, our entry was around $25. Okay, our entry was around $25 somewhere here. So I think this level a little bit hard to chase because you will want to put your stop loss somewhere there, okay, somewhere around $20 like that. So if you chase at the current level, right, the stop loss is very far. It's not it's not a good price to chase really because it has recovered a lot okay. So Chewy, for those who have it, you can continue to hold it. For those who don't have it, I don't think it is wise to chase. Then I have the Hershey bearish position. So if you need some short position, you can consider Hershey also. I went through Hershey already, the chocolate company. And then Micron. So Micron, maybe there's a chance for Micron is recovering back up, but it still have a very long way to go okay, it's still a very long way to go. But our expiration is on October. This option is October expiration, so it will, I mean, like, we still got a lot of time okay. We just hold on to it and then we see what happened to it okay. So Micron is also the very first stock that I increased my risk to 10K okay. Initially, I took about 6-7K risk, but for this trade, I just shoot it up to 10K, and then it's the first trade that I take a loss on a 10K risk so that's why you are seeing a very big loss there. And then we have the Aplovin assignment, and then we still have McDonald, and of course we have Sets and Allogene. Okay, so now Aplovin I went through already just now also. Where is it? It's gone again. I just put it up only. Okay, so Aplovin is here. So if you this is similar to Chewy. If you don't have this, right, then it's a bit dangerous to chase. But if you have it, then you can continue to hold on to it. If you are like me, you kena the assignment, right? You can hold on to it. We will start selling covered call, okay, in order to get some premium along the way. And we have McDonald's. So McDonald's is something that I've been holding for very, very long already, and it's doing very well. Okay, it's doing very well. It just broke out of there again now. So while the tech sector is crashing, right, McDonald's was recovering, and I think it can go back to challenge the high, okay. It can go back to challenge this higher. So can continue to hold on. I think the expiration is in September, so still got a bit of time. And then lastly, we got Sets. Okay, lastly, we got Sets. It kind of retraced a bit and then it bounced off here a bit, and then now we see a bit of selling coming back in. So I think it's gonna ding dong here for a while. Okay, it's gonna ding dong here for a while. But if you are able to get it at somewhere near to $3, right, I think it will be good lah. So this is leftover lah. Okay, initially I got 40,000 share, and then I TP half of them, so I have the other half there, okay? So the entry price was at 2.95. I believe most of you should have this trade back then also. We just like entered right before this very big rally, okay? I do think it can go back up to $4, but it will take some time. It will take maybe about half a year, 1 year, but I think it can go back up to $4. Okay, so that's for Sets. Allogene, we are still waiting for the short squeeze, so the short squeeze haven't happened yet. But for those who want to join in, right, you can consider because the price is very, very low. The price is very, very low. So if you want to join in, right, you can join in here, okay? So if the short squeeze happen, I'm looking at about $8, okay? I'm looking at about $8 level like that, okay? Minimum $8 level. So Allogene is also a biotech company. So much like Crystal Biotech, right? Allogene is also waiting for some of their drugs to get approved. And if anything positive happen to Allogene, right, it's gonna shoot up like crazy simply because there's too many shorties on this trade already. And the amount of short volume, right, it will take Allogene 12 days to cover, okay? 12 days to cover the amount of volume that is being shorted. So if you imagine 12 days worth of volume squeezed into 1 day where all the shorties try to cover, I can tell you it can rally like very, very high. But of course, like all short squeeze trade, right? We have no idea when it is going to happen. So the only thing we can do is we just hold on to the trade, okay? And for this trade, there is no stop loss, but it's only $2, okay? There's no stop loss, so you put in as much as you can lose. So if you put in 5K, right, then you must be willing to let the entire 5K go because there's no stop loss. I assume if it is not doing well, then it will go to zero, okay? So there's no stop loss for this. But if the squeeze happen, then it will be a very, very good squeeze. So for those who want to know how a short squeeze look like, we previously entered Lumen Technology somewhere around here. We previously entered Lumen Technology on February, February, like how many donkey years ago at $1.30, okay? And you can see that this is a squeeze trade, short squeeze trade. So the stop loss is also at 0. So the Allogene trade is exactly the same as this. Stop loss at 0, it is a short squeeze trade. And you can see how from $1.30, Lumen Technology gonna squeeze until like that. Crazy amount, okay? Crazy gain for those who managed to get in this trade. I think there's quite a lot of you managed to get in. So same thing for Allogene also. We are waiting for that kind of level, okay? So I personally got about 10K in this. So for me, if I lose 10K, then lose 10K lah. I mean, it's fine lah. It's the amount that I'm comfortable losing. But if this goes to like $6, $7, that 10K will become like 50K, 60K like that lah. Okay, somewhere around that level lah. Okay, so these are all the current trade that I have. So now going forward, right, going into next week, there's one short position that I'm looking at, and that is Toll Brother. Okay, it's mainly because the earning is coming out on the 20th, which is a Tuesday lah. Okay, next Tuesday after market hour. So I'm guessing for this stock, right, the earning is going to be quite bad because it is a home builder. And then recently we got all the home permits going down, right? Home building permits going down. So I think they won't be doing that great lah. Okay. And not only that, this rally, right? This rally is totally unjustified, meaning to say that there's no earnings, that there's nothing that is driving this stock up. They are not selling more homes, they are not getting more business. The business is still the same it is, but it just went up because of macro environment. Okay. But I think the earning is going to be quite bad. And just nice, you can see it kind of like drop down a bit. And this level here is a good place to put your short, okay? Because you can just put your stop loss here. You can just put your stop loss at the previous high at 150. And if this go down, right? If this go down, it has a very, very big room to fall. I think once the market weakness start to kicks in, right, I believe it can fall to like $80 around that level. Okay, so I have been consistently shorting this already. Previously, we shorted here. We short here, and then we managed to TP here, and then now we have another chance. Okay, we have another chance to short this again. So I'm going to go for it. So I will put up this trade structure on Monday. So you have to enter this on Monday. If you do not enter on Monday, right, the Tuesday earnings come in, it may be a little bit late for you, okay? So this one you have to enter on Monday. So this is something you can consider. Toll Brother. And next, right, I'm looking at Pfizer again. So Pfizer, I am still bullish, okay? It is just that during our option expiration, it just went down. So the timing a bit sway lah, okay? But I'm looking to re-enter again. I want to see a few bullish candle first lah, okay? I want to see the momentum go up a bit first. And then what you have is like a very nice uptrend here lah. So they also have a lot of product in their pipeline that is coming up, which can push up the stock price a lot higher. It is just that recently they are facing a little bit of like a short-term retracement here lah, okay? So if I were to go for this, right, maybe I will play a slightly longer expiration, probably like next year, January, that kind of. So if you are a stock trader, right, you wait for a bit more bullish candle, and then you can put your stop loss like here. You can put your stop loss like 26, and then I think it can go to like $36, $40, that kind of level, okay? But it will be a very slow move, like it will go up, come down, go up, come down, go up, come down, that kind, okay? it is just that when the option expire, it was coming down, so we gonna the loss there lah. But I think I will re-enter again. So Pfizer, you can consider that also. The other one is Newmont. Okay, Newmont. If you want, you can chase, put your stop loss here, put your stop loss around 45, or maybe 44 like that. Okay, I think 44 would be good. 44 would be good. Shit, okay. 44 would be good. It's below this level here. And if the rate continue to come down, right, Newmont probably will go up a lot higher, okay? And the other one is Pinduoduo. Pinduoduo yesterday, for those who came for the Friday webinar, right, I have show you how to do a cash secure put option. So I think I will be doing a cash. I mean, you all saw me enter the cash secure put option, okay? So for those who are not here yesterday, I will put up the CSP trade on Monday, okay, with the strike price at 135. So if you don't know what is a cash secure put, right, you go and read out a bit online, okay? If you are not familiar, then it's best not to enter. Mainly because at this kind of price level, I don't really want to chase, because it seems like can retrace like that. So it is much safer to do a cash secure put rather than to chase the price lah. Okay. So go and read up a bit on what is cash secure put. It's quite easy to understand. It's one of the simpler option strategy, and it is one of the good option strategy to start off as an option beginner lah. Okay, so go and take a look a bit if you want to know more about it. And also, I personally have placed some long position quite a while back on some of the Singapore REITs. So the one I have is Mapletree Industrial Trust, and the other one is Fraser Logistic and Commercial Trust lah. Okay, these are the two that I have entered. So the reason why I entered these two is mainly because if the US yields are coming down, right, Singapore rates will come down together with the US yield also. You can already see Singapore T-bill now somewhere 3%, 3.2% like that only. In the past, it used to be around 4% like that. Okay, so when the T-bills are going down so much, right, it is highly likely that the interest rate, the loans, all these mortgage loans are coming down also, which is very good for REITs. Okay, so I'm not really that I didn't really look very deep into this too, but the only thing that I know is that I wanted something in the industrial sector, and so I want something in the logistics sector. Okay, that's why I chose Fraser Logistics and Mapletree Industrial, because these are the two bigger names. I don't really want to enter all those funny risks that no one knows one. Those like 50 cents, 60 cents, those kind of risks are very dangerous to enter also. Okay. And I'm not sure if any of you entered Digital Turbine. I actually recommended this last week. I personally didn't enter okay, because my portfolio got too many long position already. But ever since then, right, it went up quite a bit. 30%. Actually went up 30% within 1 week. Okay. So if you manage to get this by yourself, right, good for you also. And I'm also looking for Teradyne and Pegasus system. Okay. I'm still considering, and my analyst kind of promoted me Zscaler, which I thought it was actually quite okay also. Because in the past, right, all the cybersecurity stock shown like hell. Zscaler, CrowdStrike, Palo Alto, 10W, sorry. Palo Alto also all chung like crazy, but recently they retraced a bit, okay? So recently they retraced a bit down, and I think this is a good level to pick up also. But the reason why I am kind of favoring this is because recently they became profitable. The net income at 90 million. In the past, right, they are losing 68 million, 57 million, 46 million. And just on the very recent earnings, right, they became profitable. Okay. So usually when a company becomes profitable, it can be very positive thing, and it can start to rally like crazy. Okay. So you can see here, when the earning came out here, it actually rallied quite a bit, about 30%. And then when the broad market sell off, right? When the overall market sell off, it also went down. Okay. But this one is more of a market risk, overall market risk, rather than the stock being bad. So I don't think the stock is bad, but it will still go down anyway because the entire market is going down. Okay. But recently it recovered back up. So you have like a very nice support level, and then just nice, the earning is coming out on 3rd of September also. So I think for a tech sector play, right, we can play this because there's a lot of room upwards. There is growth that is involved also. So this is something that you can look at also. Okay, Zscaler. So I think it will be something like Palantir like that, because Palantir last time also not profitable one. And then when it became profitable, right, it just rally like crazy. Okay. So we are probably looking at somewhere here like that, like for Zscaler. Okay, it retraced a bit, but after that, it's gonna shoot up a lot more. Okay. And I think going forward, cybersecurity is going to be a very big thing also, with all the recent CrowdStrike issue and then all the cybersecurity attacks. So I think it's a good area to invest in for the future also. Okay, guys. So yeah, Palo Alto earning coming up. They are all together lah. But Palo Alto, I believe, is next week. Yeah, 19 August, Monday already, Monday after. But I'm not, it's a bit expensive, $334. A Zscaler also expensive, but slightly cheaper lah. Okay, but I'm not really a big fan of Palo Alto because is the market cap is quite big, 29 billion. Sorry, not that one. This one. Okay, the market cap is quite big at 108 billion. So I prefer a smaller market cap lah. Okay, at 29 billion here because a smaller market cap means there's more room to run upward lah. So and I believe Zscaler is a lot more volatile compared to Palo Alto. So we will prefer stocks that are more volatile lah. So you don't have to play both, but you can probably choose one lah. Okay, guys. So that's all I have for you today. Just a summary, right? Going into next week, because we have Jackson Hole and Jerome Powell giving speech, right? Don't be overly bullish, don't be overly bearish, okay? Try to have a good balance. If you have a lot of long position that are in profit right now, like you got your Palantir, you got your SMCI, you got your McDonald, all those, right? Maybe you might want to cash out a bit, trim your position a bit. You can add 1 or 2 short position. For example, Toll Brother, I believe, is a very good short position to have. And Hershey is a very good short position to have also. So these are 2 short positions that you can go in and balance it out, okay? And then, of course, you don't be the super duper bear guy every day hoping market crash. Don't be that guy also, because overall, I think market is still quite healthy lah, but it doesn't mean that market cannot pull back a bit lah, okay? So the reason why we are having a few short position is that if the market pull back, right, we can earn something. And that is how we beat the market lah, okay? We cannot beat the market with all long position one. You must have short position to beat the market lah, okay? So all the best, and I'll definitely be online lah, okay? So since all the earnings and all the speech is happening next week, right, you will see me very active on Discord channel also lah. Okay, guys, all the best. Have a good night. Have a good weekend. See you next week. Bye-bye. Good night.